Good evening, this is Nick Inman from VolumeProfileTrader.com on Tuesday, March 6th. Looking at the S&P, my apologies for not having videos the weekend. I didn't think it was necessary to have a video. Yesterday I made a video and it wouldn't load. For some reason, it's done this before, but it doesn't really matter. The point was I wasn't going to remake a 20-minute video when it really wasn't necessary. Hopefully you've taken my advice from last week and maybe the week prior to that, saying, look to take some profits, especially if names you're holding are starting to falter. And we saw that with a few of the names we were holding, but a lot of the names, for example, Under Armour, that one sticks out to me the most. Maybe Las Vegas Sands. We had some names that were outperforming, and now they're coming in, and we expect that, but should we be looking to reload on this pullback? And I think that's the answer to that question is yes, but with caution, and the caution being the jobs number on Friday. If we get a nice number, then I think this weakness is a buying opportunity. If we get as expected number, maybe you should look in any strength, maybe sell some, and then if we miss it, we'll probably see a little more downplay to the market. Now, that's not necessarily true, but it's something to look for. So looking at the S&P, I have a 30-minute chart up. You're looking at weekly profiles next to a 20-day profile, so about nearly a month's worth of trading. And what you're seeing is the market's gone from this high volume range, really from 1360 to 1370 or so, that it's formed. We had a double top at 1375 or so, and from there we rolled over. You can see, I'm going to zoom in a little bit to make a point. When this market was starting to top out, and something to just be aware of, these swings that we got from peak to trough, in this relative range here, the moves were more drastic. It was up 20 points, down 20 points, up 20 points, down 20 points. And with those kind of moves in the market, it's when the moves weren't that great, even a weeks prior to when these moves started to happen. And I'm talking about back here. It gives you the sense that things are getting a little more whippy, and the likelihood for some type of directional move, a change in direction, I should say, a change in trend, it's probably likely, especially after the run that we've had in the market. So looking at where we've come from, look at the point of controls. We've had rising point of controls every week, and now what we're seeing is we have a point of control below the week's prior point of control, above the week before that. You see the balance range, and then we break through that range. So now this point of control, this 1360 level and up, is now considered resistance. That's the I want my money back crowd, and you can see the defined support. It was the biggest volume traded level, generally speaking, let's see, it was the week of 2 weeks ago, so it doesn't really matter. You see the move we had off that level, a nice bounce and a move higher to basically go to new highs. A sell-off back to those levels. We had like a mini double bottom, a push back up, and then we have our double top that forms. It starts to roll over, continues to roll over. Couldn't hold last week's point of control. Fell through that. We opened up this week with consolidation for 1 day above this 1360 level. That's your significance. But what's going on with the whole moving averages? They're all moving down, well, except for this yellow one, which isn't even whole. It's just a simple 400. But they're all moving down, which shows you momentum starting to push to the downside. And you could see it was even back 2 weeks ago. We had a push to the downside, but the buyers came in. The price action turned that around. So what we saw here last night, overnight, is we broke through this 1360 level and it flushed down 20 more points in the S&P. So we have to look at, we know that 1360 is any target on the upside, and that is a target that you should really consider selling into. Now, at least taking profits into, I'm sorry. Now, where we are now, though, in the market, and I'm going to bring up a different chart now. Okay. You see on this chart, these are the monthly profiles. We're sitting at point of control for February. So, and you can see, for right now, we have a little bounce in this market. So now, we think we have the floor to this market based off of last month's highest volume traded price. So, you're going to get at least some type of stabilization for now at these levels. If this 1338 level or so doesn't hold and we continue to push down, then your next target, you would look for the January point of control level. You know, this high volume level in general, around 1310 or so, would be your downside target. For right now, these whole moving averages on an hourly chart, they're just starting to roll over, which gives you a sense that through studying the whole moving averages, we're in some type of balance range most likely, and most likely we've put in the top to that range. So realistically, any move above 1365, unless if it keeps powering through, should be sold into with any type of struggle in the market. But your target before that is 1360. So right now what I'm trying to say is it's not a bad risk-reward ratio to be buying right here at these lows and looking for a move back above this 1350 level and see if we can go and test 1360. The NASDAQ, similarly, point of control for February. That's the sweet spot. Now you can see the Dow, it looks like it's really topping out, and we have 2 months in a row. It similarly looks like the Russell, but 2 months in a row you have point of control at the top end of the range and then a flush down. I take this as, well, you look at value area support potentially. It goes in line with the S&P and NASDAQ, but this is more likely to top out at some point. Look at the volume at this 13,000 level, right below it, versus the volume down here. So even though we have, what looks like similar volume in February at both 12,800 and call it 13,000, when you add March's price action so far, there's been a lot more volume. So this has a little more ways to work. You still have a pretty decent size I want my money back crowd, and you should look to sell into any strength on the Dow. So if you're looking for names to short into strength, you could maybe look at something like a Caterpillar. So holding this point of control for now. In any strength, maybe you could fire on a short. Now, really, the time to short was when the market was rolling over. So it's, you're going for a second wave to the downside, needless to say, or at least a push back down to 105. So basically look to sell 112, 113 with a move down to 106 or so. Unfortunately, the move it's made, maybe this wasn't the best example. Hewlett-Packard, this is a name that you would look to sell into strength. IBM, still kind of holding in there, so there's really nothing to say about that. Let's get to the names that I've mentioned. Freeport-McMoRan, this is a name that I was saying, you want to look to get involved. $39, sure enough, yesterday's low was 40. We got a 50-cent bounce off of those lows, so over 1%. Today we gapped over, open even lower, and we got the low was 38.65, and so we nearly got a dollar bounce, a full dollar in Freeport, about 2%. So I'd like to say that you could define your risk by putting a stop under these lows. You can see in January, the beginning of this year, basically the levels that we came down to. So you could place a stop right below 38.50 or so, and your anticipation would be a bounce up to 43, 44, where you would look to take half of this position off and see if we're going to stabilize, and maybe you have a shot back up towards 47 to 49. Now, if that's the case, then you're going to be kicking yourself for buying at these low levels, selling all at 43 just to see it consolidate and continue back up to 47. So that's just something to be aware of. The fact that, this market could just rebounding and continue, another push higher. So you look at names like Freeport, you can define your risk, and hopefully you've taken, I'm from scaling in both yesterday and today, just to let you know, my cost basis is around $39.60. So I'm essentially risking about $1 for about $3 to $4 of upside. So that's not too bad of a trade. I like that risk-reward ratio. Apple, this is a name that I continue to put speculative positions on, both to the upside and the downside. I have a call spread position where I collected premium instead of paid for it. I sold the call spread for $2.75, and it's the 550 by 560 expiring next Friday. Now the option is profitable, and I can take it off anytime. Like, for example, today could take it off for nearly 50% of that profit. So it would be the return in percentage would be around 15% in what, 3 days? 2 days I've had it on. I also put on the 515 by 510. I think it's 510. 515 by 510 or 515 by 505 put spread. I sold that also. So what I'm essentially doing is bracketing in Apple. Now, Apple's really volatile right now, so I do think that it's going to work. One position's going to work, and one position's going to get close to not working. But right now, they both have small profits. I wish I caught Apple when it was lower, because I would have probably put on a lower spread, and probably the 500 spread, 500 by 490 or something, and the premium would have still justified. But I missed it, and now I'm just saying, okay, the lows that we saw today, those are pretty important lows. We got as low as 516 and traded back up to, let's see, 532. That's pretty impressive, and it's something worth noting. Now, if it starts to struggle and get back below 525 or so, that means this buying tail that we've seen on the hourly chart, it has the potential to lose all of that. So at 525, I would look to take this put spread off and basically think about a new position. I really like that the option premiums are this expensive. I'm interested in selling premium on Apple right now. Basically, if Apple looks like it's going higher, I'll sell premium under the market, vice versa. If Apple looks like it's going lower, I'll sell premium right above prices at some point where I can define my risk. Gold, bouncing off of January's point of control, something to be aware of, would be, I have to be honest, I think you have to look to be a seller into this strength of gold. I'm sorry, into this, you look to sell into strength on gold, and I will take that back if we can get back above 1730, start to trade back where these levels did matter. We saw a breakout and then a fake out. So we are at a place where you can define your risk to the long side on gold. One position that you can look at doing is when I was looking at this, GLD was trading, right around these levels. And these 164 by 165 call spread ending this week was trading for 30 cents or something. So you can get a 3-to-1 payout on gold if by this Friday it can rally up to 165. That 165 is essentially closing the gap. So remember, on the actual gold futures contract, this point of control level, 1662, matters, and it's a place where you can define your risk. So you would look for a bounce, and a way to leverage that bounce is to do the 164 by 165 call spread expiring this week. You could even go out to next week. However, actually, I don't know what the premiums are. I just looked at 164 by 165 this week. But if you were going out to next week, maybe the 164 by 166, maybe that's an option. But I do like this trade setup. It would be similar to a Freeport trade setup. It's currently trading 39.44. What you would want to do is buy a little bit out of the money to give yourself, basically, you're dishing out less premium than buying at the money or right under in the money. And what that says is, just by, for example, buying the 40 by 42 call spread or 41 by 43, you're basically saying, okay, Freeport's going to bounce in a certain amount of time frame, and I'm not willing to put too much money on it, but if I'm right, or if this ends up working out, I'll at least have a 4-to-1 payout on this trade. So the important thing on this trade is, no doubt, it's a falling knife, but at these levels you can define your risk. So therefore, you have, if Freeport keeps falling, at least you can get out and you know why you got out of the trade. So you're risking very little, and if you put on a trade that doesn't cost much but gives out great payouts, maybe like a 3-to-1 or 4-to-1, you will see, basically if it works, you're going to make a lot of money, and if it doesn't work, you're going to lose a little bit. One, because you sold the higher option, so you made a call spread by selling the higher strike, and you have limited risk to the downside. You know where your stop is, therefore you can get out. So there's two, this is really what you look for when you trade or look for trading setups. And so Freeport, that's an example. We have the gold example, the 164 by 165 expiring this week. Trying to think what else I've been looking at. Under Armour, hopefully, these option positions that I put on these pullbacks, they paid out, and I've been long gone out of them when they hit a double. But for owning shares, which you should own some if if this is a longer term thesis, you should be looking to scale, buy more when it comes back to the mid 80s. You have February's point of control at these levels. So mid to low 80s, not a bad place to regroup and look for another push to the upside on Under Armour. Chesapeake's pulling back basically to where it broke out. Just be aware of. Possibly the conclusion to this is you can look at any stock that we've been looking at, maybe a stock that you like and you like to trade, but if it's in a position where it's ready and poised for a low risk, potentially decent reward payout bounce, maybe that's something that you want to be a part of. Not promising anything. This may only bounce another 5 points from here, which means we're in a 10 to 13 point balance range on the S&P, and that could lead to, basically the stop before another move lower. One thing to note is the volume, which, I'm really zoomed out, so it's back in the summer months also, but the volume at this 1310 level or so matters. If I zoom in once more, it really actually it doesn't matter. So I would take this chart into more consideration. So I'm going to stop rambling. What I'm going to say is the market looks poised for a bounce. You look to sell or take profits into the bounce. So one way to do that and to keep your discipline is to maybe use call spreads on options. Go out, I would be looking for a bounce within the next week. If it can't push up towards 1360 in a week, then this market's most likely going lower. So look for a bounce, define your risks, say, all right, if it moves much lower than these current lows today, I'm out, no problem. But in all reality, this is a pretty good spot to get involved in. Let's look back at the recent price action we've seen, and going back, excluding what we see now. Point of control, here, let me do this. And here I go rambling again. But I think this is helping, and I hope it's hitting home with you. But all right, let's do this. Point of control. The next month, what happens? Sell off. Point of control. We get a push at that off the end of the month. Next time it hits point of control, what do we get? A bounce. Next time, a bounce. And then point of control forms at the top of this range. Even if you miss this move, what'd you get on strength? You get a sell-off at the point of control. We get a huge bounce. Oh, by the way, this was the 2-year point of control bounce. So that's something to be noteworthy of. But we get to October, get above September's point of control. What do we get? A move higher. October's point of control, what do we get? We get trades off of it. We have October's, we have November point of control. What do we get? A move off of that, a retest of that. Sure, we get a little bounce, but really, once we get this move into strength, start to sell off again, you could make the assumption that, we're selling off of these highs, going to test the lows again. We bounce off these lows, which really you could look back towards September or October's point of control, that general level. You could look at, where it was rejected from back in November, but there was really no, on a monthly scale, there was no volume indication that, this was going to bottom. But I know just the fact that, from this move was looking to buy on any weakness. So we were. But anyways, into the new year, we gap open, point of control for December. What do we get? A move higher. January, what do we get? A move higher. February, what do we get? That's what I'm looking for, a move higher. And you can look at, take this, these October lows, a similar to this. We have a continuation, point of controls in the middle. What do you expect from that? You expect, these bounces back up to general levels where they sell off. So we're finding the bottom of the range. The top of the range is probably somewhere towards 1360, 1365, and you look to sell that range. So I hope this helps. Take it for what it's worth, but maybe re-listen to this. I do think I gave some really good pointers, and to really point out what I'm looking at, like right now in the market. And for example, right now into this afternoon, I bought the S&P futures at the 1340, 1341 level. And the reason why was because I thought that we could see a 10-point bounce or so in the S&P, and I wanted some leverage. Now, trading at 1345 right now, actually 13475 if you want to get specific, but I've already taken half of that risk off, and the other half of this position is at break even. So even if I get stopped out, I still made a good profit on this trade just for understanding to buy at the lows. Now, the other names that I think could bounce that I'm long also, they are all beta. I'm looking for a quick move. I'm looking for outperformance where I could get it. I think Freeport's one of them. But anyways, take care. Have a good night. This is enough of this. I will talk to you tomorrow.